Hey everybody, this is John and welcome to the free video, and it's a wrap. 2016 is done, and so I'm going to go into a lot of detail in the premium video, so I'm just going to touch upon this theme in the free video. But what I'm looking for as we head into the new year is a massive reversion to the mean on the weekly charts. And most companies I'm looking at that have enjoyed healthy rallies are fairly far away from that level. So we in the room today, we're buying some puts on things like Tesla. Again, not looking for huge gains. I think Tesla has that opportunity to fall $8 or $9. So by buying a put debit spread, kind of a home run type situation here, and some in the money puts, we're positioned for continued weakness. Okay, another one that I like that fits the bill is Amazon. Amazon is breaking through a major wedge pattern. This thing could get absolutely trounced going into the new year. Now, I don't want to say it may sound like, oh my God, John, you're really bearish. No, it's just looking at, we've seen this pattern over the last 3 years where we kind of rally into the end of the year, and then the first week or two, there's actually some fairly serious selling. So just be aware of that. I've got some positions to help kind of take advantage of that if it happens, right? And then go from there. But I'm not looking for. I could see a situation where we kind of get that panic. All it is a reversion to the mean on the weekly charts, and then things settle down. So just don't. I just want to kind of give you a heads up so there's no kind of freaking out at the beginning of the year. And this also includes the SPX, the S&P 500. We could drop another 60 some odd points here, and all that would do is be a reversion to the mean, which frankly would be normal. Which is normal in any market, and that applies to the NASDAQ as well. Okay, so that's what we got going on too. And if we look at this in the various asset classes like the dollar also is pretty far away from the mean. So I would just say again that this is a theme to look out for the first couple of days of the year. The other thing that we're looking at is tax loss selling trading. So this is an example of one of the ones that we did today in the class, where you see stocks that have just been obliterated into their dead lows on the last trading day of the year. So you go in and buy calls and some stock, and you look for a little bit of a bounce, which should be a lot of fun. All right. Okay, I just want to tell you, and this isn't perfectly lined up here, but you'll get the general idea. I'm going to do a free webinar on January 10th, and this is the first time we're talking about it, so it kind of gives you a chance to get first in line. You can go to simplertrading.com/shift, or of course you'll probably see the link in your email, and all you got to do is click this. Again, this is a free webinar, but it is going to fill out. This is going to be one that's also marketed to some of our partners. So it's a kind of a first come first serve. I encourage you to grab your spot, and then you'll be good to go. But I'm going to talk about just kind of the generation shift of what's happening with assets. Remember, from 2008 to today, we've been in an asset inflation environment with interest rates dropping. We are switching to the opposite side of that. What does that mean for the markets? So from a big picture perspective, we want to look at that, but also from a smaller picture perspective on a day-to-day and a week-to-week basis, how does that impact how we can safely pull money from the markets? And so we'll be covering all that, and it'll be a lot of fun. All right, you guys have a fantastic long weekend. Thanks for hanging out with us in 2016. 2017 is going to be a great, incredible year, and I'm looking forward to spending it with you guys and gals. Have a good one, and we'll see you on the other side.